This is Alan Farley from FX Empire. General Motors reports earnings after Tuesday's closing bell. Taking a look back, following the March 2020 recovery, the stock broke out above 8-year resistance in the 40s at the start of 2021, came up above the $60 level, which is where the trouble started. We have one, two, three, four, five failed attempts to get through this barrier right up here in the 60s. Now, the last one was right at the start of 2022. As you can see, we had a very big failure after that, coming all the way down into the upper 40s last week. Unfortunately, accumulation has dropped to about a 16-month low at the same time, showing that a lot of GM shareholders took their profits and gotten out of the way. Now, the stock is very oversold, which probably sets up a fairly strong bounce after earnings, as long as those earnings are within expectations. As you can see, it's really trying to defend the $50 level, a little bit higher than this low in the 40s back in August. And if it's successful, I think we get up to these moving averages, but I think we're going to have trouble up there too, because this broken accumulation here is really going to take a while to improve. Now, this looks about the same across other parts of the automotive industry. Tesla's in the middle of a correction. Ford Motor is now in the middle of a correction. And it's really a hangover after all the electric vehicle production buying interest in the last couple of years. Well, reality is setting in. We still don't have a nationwide charging grid. Battery technology is still kind of limited, even though by the middle of the decade it should be really solid. And the sticker prices for these cars are very, very high. This is forcing many consumers to take a second look and decide possibly to wait until the second half of this decade to buy their first electric vehicle.